Joining us now for an exclusive interview is JPMorgan's Global Head of Investment Banking, Jennifer Nason. She's been with the firm for more than 3 decades, working on deals including Cisco's recent offer for Splunk. It's so great to have you here. Thanks for being on set.
Thank you for having me.
Okay, there's a lot for us to talk about. I do want to start with IPOs, though. And I guess first, sort of a week and a half, 2 weeks in, 3 weeks in, depending on which company we're talking about, can we say that these have been successful and that the pipeline is reopening?
Yes, we can. 3 deals, 3 very different IPOs sort of have reopened the IPO market, and now we need to build from here. And I think we have 3 happy clients with what they've accomplished.
Yeah, and JPMorgan was book runner on all 3 of those offerings. So other companies that you work with, are you having conversations about them going public now?
Yes, so we have a robust pipeline. It's all a question of timing and when to go to market. I think we'll see a few take advantage of the fourth quarter, but most will push things to Q1 or Q2, I think, largely because you can, work off 25 metrics at that point. So that'll be one of the reasons why people push it. But it's an election year, there's market risk, so there's a lot of trade-offs in all this decision making right now, which I think is super interesting.
Not to go through all 25, but when you say 25 metrics, what do you mean? What's special about Q1 versus the last quarter of the year?
Well, I think people can look, as people talk to investors and position their story in the market, they can look further forward. As we cycle through this year and get into next year, then investors will be having conversations about, financial performance in 2025 as companies tell their story, either on the road or just in positioning ahead of time.
Has the traditional playbook, IPO playbook, is that still in effect here, or is this a new world order?
Yeah, so I think it's a completely new world order. So I think in 2021, not that it was rinse and repeat, but the market and issuers and investors kind of had their playbook together. You knew what to expect from investors if you were taking a company public. So while the factors haven't changed, I think the tension between them and the trade-offs you have to make it's all been sort of thrown up in the air, in my view. So, for example, deal size. What do you need to make sure to have appropriate liquidity, but how much of your company do you actually want to sell right now? Cornerstone investors, sort of unheard of in the US market for a long time, now very much part of the routine, and we saw that with at least 2 of the deals that happened last week. Retail versus institutional, lockups, where can you push the market, where can't you push the market? So what we believe to be true in 2021 is no longer true today, and that's sort of determined in market. So I've been around a long time. This feels more normal to me when I think back over the arc of history than the playbook we were using in 20 and 21.